Welcome back, everyone. I hope you all shared your feedback and visited our expo booths. Now, starting with the first panel session of the summit. Overlook NBFCs facing tough choice of valuation versus sustainable growth during the pandemic. For which I would like to welcome Mr. Ashok Mittal, Chief Executive Officer, Press Loan, who will be joining us shortly. Sanjay Sharma, co-founder and managing director, iFinance; Amit Sharma, managing director and chief executive officer, Satin Housing Finance; Manish Thakur, chief operating officer, Avanti Finance; Palashendu Bhattacharya, sales head corporate business, Red Hat India and SA. Now, I would
Hello.
like to hand over the session to Sanjay Sharma to take this forward. Over to you, sir.
Good morning, everyone, and good morning, viewers. Uh, Today we have a very interesting panel and a panel of very experienced people. Amit from Satin Housing, Manish from Avanti Finance, Palashendu from Red Hat, and Ashok Mittal, who's supposed to be our panel coordinator, but he's a bit into a technical problem. I think the connectivity is not very good. So let's get started. The topic we are talking of today is the quandary that NBFCs are in during the pandemic time on whether to go for valuation or whether to go for sustainable growth. And I would like each of the participants to quickly introduce themselves and probably try to shed some light on this quandary. How are they looking at the pandemic situation playing out, and whether they are going for getting the valuations up uh, or looking at sustainable, slow but steady growth. Let's start with Amit. Amit, please.
Hi, good morning, everybody. Nice to see all of you. So, I think the topic is very interesting because I think it covers the practical aspect of the business. Coronavirus being an event risk and one of its kind, so it's become very, very difficult for all the entrepreneurs or maybe the business guys who are sitting here to manage the show. So, for me, I think so. I'm the founder of Satin Housing Finance Limited. We formed this company in 2018. It's almost a 3.5 or 4 years journey, and we would have faced the toughest time in all aspects, be it corona or the liquidities or the what we call as change in the amendments for the housing finance sector. But yes, speaking specifically of the event risk, which is the corona risk, if you talk from my perspective, I think the business continuity was the most important aspect that we focused on, being a mid-sized company. I would say that sustainable growth is of utmost importance to us, and evaluations are basically taken care of in the long terms rather than the short terms. So for us, quality has been the essence, and basically managing the mankind and the business continuity was a tough challenge for us. But I think we have been able to steer the ship very nicely, and so far so good. We have been able to stand on our feet very nicely. So just to put it some aspects on how we did it, it was that we really took care of our employees. We never pressed on the valuations and the profits because for the last five consecutive quarters, we have been into profits. So I don't think so. Valuation was the important thing for us during this pandemic time, and being a very mid-sized company with 4 years track record and being a housing finance company, business continuity was an importance. So that's how my vision is, and that's how we have panned it up. And yes, life and livelihood challenges are still there, and they needs to be managed. But I think Corona is on a back seat, and event risk don't shake the structure. They shake the structure, but they don't destroy the structures. So I think the structure and inherent demand is pretty good. And if all of us have been able to survive this time, I think now is the time to really look forward for growth. And of course, if we grow profitability, then valuations are supposed to come, because I think the valuations or the stock price are basically the slaves of earnings and profitability. But yes, I think from Satin Housing, we have been able to manage it nicely. And now we are looking forward for a great leap in terms of business growth, valuations, and other aspects. So that is a small stint, and basically sharing my experience from this pandemic.
Thanks, Amit. Very well put. That valuations are a slave to good performance, steady long-term performance, and therefore, rather than a short-term trying to optimize, you have focused on the long-term and continue to maintain a steady ship. Wonderful.
Thank you.
Let me invite Manish Manish, please take the mic.
Thank you. Thanks, Sanjay. And good morning to all. So I think Amit has put it very aptly. Clearly, the pandemic created a lot of havoc for the kind of people that we work for at Avanti. We were a small company, actual startup, focusing on, in a way, fintech for the rural. That's what we are focused on. And COVID actually created havoc for the kind of users that we work for. Life and livelihoods were disrupted. The first wave was more economic. The second wave was economic and health, and the near and dear ones. So it created not just the economic situation, it's also created a lot of emotional havoc for our users. And we have, as such, focused mainly on the survival, on our users, what works best for them, and also what are the levers of growing on a sustainable basis. Being a small company, being a startup, we had an advantage in terms of not much of legacy. We have always been digital in our outlook, and that actually helped us in terms of a faster growth post the wave two, till of course December, January, the threat of Omicron which came in. Our focus has been more in terms of building a sustainable company. Do not, yes, there are variables of valuation that we need to worry about, but those are more outcomes, and those are not something that are in our hands. What we can do is build a sustainable, scalable business model, which is which actually should be able to bear the threat of any kind of a event risk, COVID being one of them. And I think that's my view. I think valuations are an outcome. What we need to focus is on the process and doing the execution the right way. Thank you.
Thanks, Manish. And it's good to know that even for early stage companies or new small NBFCs, the focus has been to maintain good equation with the customers. You mentioned that you wanted to make sure your customers remained in good health. And I think that is absolutely right. That unless your customers stay in good health, there isn't going to be a long-term business, and therefore less chance of a good valuation. Uh, Let me move on to Palashendu. Palashendu is not from the finance industry. He's the unique man here who's from the technology industry. He's from Red Hat. And Palashendu, while you may not be looking at this COVID period from a perspective of valuation, but please tell us that what can the technology be used for in such disruptive times to maximize valuation or stabilize the company?
Great question, Sanjay. And actually, I was hearing very, very carefully when Mr. Amit or Mr. Manish was talking about. And a few points I was noting down. One point is business continuity. The second point is well-being of the employees. The third point is customer centricity. And the fourth point is uh, partner centricity, I believe. And if I look at uh, uh, just by virtue of being in this industry for some time and talking to the CEOs and CIOs almost day in day out, uh, these four problems what has been human as a human civilization is facing is really put us in terms of challenging times. And technology, fortunately technology has take that step, and I believe moved forward and helped to address some of these areas, like let's say business continuity. The moment suddenly we have all had to go back and start operating remotely, so we initially saw there was a little bit of hurried different initiatives, but gradually we have seen that people understood what needs to be done, and they started working on this, taking their infrastructure, corrective measures, improving the customer experience, different interfacing applications, or if there is no such applications, try to go there very fast and build something. So the similarly, if you're talking about the employee well-being, you have to reach out to the employees and give those advantage, give those caring through this virtual mode only, because there is no other way you can go and meet them. So there is a huge evolving activities has been happening and still happening. And there is a few, I believe the famous a cartoon which has been circulating in the social media for some time. A huge blow is coming, and the digital transformation is taking and changing the future. Actually, this something we are seeing it. And the four pillar what the leaders has already been talking about, I believe is in the center of the universe presently. And fortunately, technology has been helping in these four areas uh, quite ably. And another point actually I can highlight, from being an open source organization believes on open source philosophy, uh, the way we can communicate to these four areas, I believe that is the most effective thing, means communication, and that communication channel once again uh, can help us, this digital transformation can help us building those platforms. So while this pandemic is throwing us a lot of challenging time, but this pandemic is also opening up a huge opportunity to grow, scale, and especially the new age companies. They are not, fortunately, they are not carrying any legacy, so they have everything to build from the scratch. So it is a huge opportunity from them, and to get a level playing field. I believe that is a, if I look at in a different way, that is an advantage to the new age companies to build something new.
Thanks, Palashindu. So, yes, one way to look at the pandemic is that it also can be an opportunity going forward, and opens up the ability to use technology and leverage technology even better. And I think most of us would agree to that, because we've seen many of our customers who were very hesitant using the digital payment or digital contact are beginning to use that, and I think it opens up an opportunity. Uh, Let me move on to Ashok. Ashok, we're talking about what are the challenges of long term versus short term. So whether to go for optimization of valuation or look at steadying the ship. What have been your experiences and your thoughts? Ashok, you'll have to unmute yourself.
Yeah, thank you very much. I think the most important learning of the, let's say, COVID was a blessing in disguise, where all of us companies became more innovative in terms of understanding how to handle the customer and also how to use technology. I think the most important aspect when we look at value or valuation, in my view, it is important to create value for the ecosystem. If we are able to create value for the customer, the valuation is just a byproduct of that. All of us, including press loans, I main focus during the COVID period was that how do we support the customer by really understanding his current situation. So this is, I think, little beyond whatever government support was provided. Um, to really understand his cash flow and to support him, whether we give him additional finance or give him little extra time. And like you said, a lot of people actually moved to technology, whether it was doing a KYC verification, whether it was doing that PD or personal discussion with him through the video calls, whether it was getting the digital signature done, which was not happening earlier. Of late, we have also seen that you can do digital sign or e-sign through using the Aadhaar. So, I mean, a lot of innovation has happened during this time. And Of course, there are a lot of learning challenges, etc. But the focus has moved more on creating value for the customer, and that is, in my view, the key. If you're able to create value for the customer, the value or valuation for the company or the shareholders automatically happens.
Sure. Thank you, Ashok. I think completely it summarizes, I think, the view that everyone holds that I think it's the long term that is important. And even I head iFinance, where we provide loans to micro businesses. Our thought has been along similar lines, where we have focused on making sure that the customer stays liquid and the business continues to work. We have seen wonderful results considering the background of COVID. We haven't seen mass defaults as was predicted by some of the gurus in the industry. And I think it's primarily because most of the businesses and most of the customers are quite resilient. And if we look at steadying the ship, which means not going after too much of profits, not trying to cut down on employee costs or other costs, but building for the coming times where growth is going to play a major role, we would probably end up optimizing the valuation. And I think I reflect the views expressed by everyone. I don't think anyone mentioned that it's a short-term approach that should be taken, which is wonderful to hear. Uh, a lot has been talked about in terms of how people have overcome the pandemic, and I don't want to get into that because that's everyone can talk stories around that. But let's look at a couple of key areas which have been in the news, and I think we as practitioners can probably shed more light on it. One is on the liquidity scenario. With the pandemic, how has the liquidity scenario evolved for you? And do you see any improvements in the liquidity scenario going forward? Let me invite Manish first. And
Yeah. So in terms of liquidity scenario, I think we saw the government, the regulators stepping in very early in the phase one, and taking steps to ensure liquidity for the various financial institutions, and that continued over the wave two as well. And while I would say that a lot of that liquidity was actually made available or was used mainly by the larger NBFCs, larger and medium NBFCs, it did not flow to a lot of smaller NBFCs. But of course, there were always trickle effects, and last 2 years we have not seen a worry in terms of the liquidity scenario, availability of liquidity. As mentioned, we have grown uh, 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 now sizably over the last 18 months, and we have been able to raise funding from various banks and NBFCs for our lending, and we were able to raise equity as well in this scenario. So liquidity was always the focus because we focus on growing more consistently rather than and that's always, I mean, from the kind of business and the kind of borrowers that we work with, consistency in terms of growth is actually very important than really very high growth and then stop and start kind of a scenario. So liquidity was put in. It could have been, I would say, just from a organization like us, could be more directed towards the smaller NBFCs, slightly made more easier for access to smaller NBFCs, but it has been available. So I won't really complain. I think governments as well as regulators work pretty quickly on that front. Going forward, of course, the liquidity has linkage to how the underlying business is going to do. So the challenges that we'll face and the resilience of our customer, as you mentioned, is how the efficiencies, delinquencies play out, or I mean, March results will be in a way. I mean, we have seen quarterly results and improvement in that scenario, but since the margins are pretty thin, it still needs to improve further to really over the next 2 or 3 quarters. So one will wait and watch, and therefore we have seen a cautious stance in terms of further lending to NBFCs and NBFC MFIs. So one does fear that with, of course, the interest rate outlook, with what's happening in terms of globally, there might be some amount of, I think, liquidity fears that might be there. But again, for the good companies with the right kind of signs, I don't think liquidity will be a problem. Thank you.
What are your experiences, Amit?
Yeah, sir. So I would like to present it in a very practical aspect of the liquidity, because liquidity is very, very important for anybody to survive. So when I formed this company, so my ethos was that we believe in quality rather than quantity. So I think we have been pretty good in terms of numbers, in terms of quality of the portfolio. So liquidity has been there for us, but yes, I would not say that it is easy to get the liquidity, because the plight of the market is, since you are a mid-sized company, you have to be in the profits. Then only banks will look at you. Then you have rating rationale also. So you have to really manage your business and stand on your feet, because you have bills to pay, you have salaries to pay. So I would say that we were a very conservative group. So we had a right kind of equity also, with the right kind of debt mixture also. So quality, and as he rightly said, if the business is pretty good and it is stable, and the lenders also feel comfortable, and maybe you also have the muscle power to put in the equity. So liquidity, I think, was a challenge, but it is there for us. And being a housing finance company, I'm sure we lend it for 20 years or 15 years, and we get a loan at around 7 years. So managing ALM has been there for the industry for quite long, but I think the industry has been able to basically take care of it, and that's how it has worked for several years. So I think liquidity is there, and liquidity is there for good companies. It is always there for the good companies. The banks also have lots of funds, except that somewhere the pricings and the other risk factoring may be there. But liquidity has not been a concern. And this time, I think the government also has been very proactive. So in LTRO schemes and other schemes, from the housing finance perspective, we have got the money. But as he rightly said, that more could have been done for mid-sized companies in terms of some preferential treatment of interest at which we borrow. But so far, so good. I think we have been able to manage. And especially from the housing finance perspective, I think the demand is pretty good. And off late, we have been able to get a lot of sanctions, and liquidity is there. So I think if we have survived the toughest times and able to take care of our business in terms of liquidity, I think the future is looking pretty okay, and we'll be able to manage it. So liquidity is there, and I would say that if your company is good, then the banks are flush with funds. They also need good borrowers, as the way we also need it. So I think it's a two-way traffic, and it's going to be there for all the good players.
Thank you, Amit. Ashok, your experience?
Yeah, okay. So I will actually divide this entire thing to three parts. One was during the COVID, when government came out with various schemes and was providing liquidity. Unfortunately, it remained limited to very selective top end, highly rated companies, and lot many companies, like maybe 500,000 NBFC companies who were servicing MSME, were but not somehow qualified to take advantage of the government schemes. They could not take the advantage. So as a matter of fact, that liquidity benefit which was provided for the benefit of MSMEs, and like we service the first M of MSME, micro. So they actually could not take the advantage, benefit, or could revive their business through the government support. Of course, we like NBFC, we provided support to the MSME sector, but they really could not take benefit. Second part is the equity capital. So, of course, during the COVID period, everybody was out, and there was hardly any support from private equity or venture funds, etc., to provide more capital to new companies. So, wherever you had existing investors, they provided the liquidity support by way of infusing more capital to take care of the, say, capital adequacy ratio, or to take care of the loans. But of course, the valuation part is little different. But if there was a company which was not, let us say, funded, and during that time they expected to raise fund, it was very difficult. I think even today it is little very difficult, because the impact of COVID on the balance sheet is still there. So if you look at private equity investors to provide equity to NBFC companies, so they somehow differentiate between fintech and NBFC. So that interest is there. Slowly it is coming, especially on the MSME segment. but still it is little slower. My personal feeling is that now the differentiation between a fintech, so-called fintech, and NBFC is gradually narrowing down, because even NBFC companies, and I can say at least for us, and I also know how Sanjay you are doing, means lot of technology happening at NBFC space. So it is not really that a fintech is very different from tech-enabled NBFC company, right? So that difference is going off, and once that is understood by the markets or investors, I'm sure more equity will come to the segment, because they are still little cautious about NBFC. Third and most important aspect, in my view, is how the co-lending has actually evolved. So I see a lot of interest of all the banks, whether they are private sector banks, old private sector banks, or new private sector banks, especially PSU, are getting into co-lending with larger NBFC at a very large scale. So they are very keen on the segment which we service. We press loan service MSME segment. So banks are, let's say, providing very large credit lines to bigger NBFC companies, and those lines are getting flowed down to mid or small size NBFC companies. So as a matter of fact, if I really share with you right now, we have a couple of co-lending arrangements, and the supply from those and larger NBFCs is huge. I mean, there is a huge demand, and they say, Ashok, you just do the business how much you can do. Of course, keeping in mind the quality of portfolio. But now, if you are into MSME sector, if you are into any sector which is priority sector lending, the lines are huge. So from that perspective, you do your, let's say, any FLDG model, whether it is 5%, 10%, 20%, whatever it is. But from banks, the lines are getting flowed to bigger NBFC, and from there to medium and small size NBFC companies. Hence, now if you look, if you are into MSME sector, or if you're into any sector which is say PSL, there is no shortage of money as far as liquidity is concerned for these particular sectors.
Sure.
Yeah.
Thank you, Shok. I think a good summarization of three key points. Paleshendu, while you are not from the NBFC industry, any comments you would like to make?
Yeah, actually, I'm in a listening mode and learning a lot from you, everybody. I was noting down one point of Mr. Ashok when he was talking about this fintech and the breach between the gap between the fintech company, the technology, and the users of the technology is narrowing down. And if you look at why it is so, being from the industry means if I'm a technology, I mean geek, I know a lot of technology. I may not be knowing the domain, whether to give a loan to a person or not, whether should I build my portfolio in this way or that way, what is my appetite. So there are a lot of domain knowledge is involved
Sure.
in this industry, and it is true for any industry. So that marriage has to happen when a fintech company comes in. I believe that that marriage has to happen. And another important part during this pandemic has actually evolved so much. I mean, so importantly, that is the customer centricity. Means as a customer, how can I reach to the required services? How can I get my necessary product or service at ease? And there I this the fintech companies, even the traditional finance companies, are taking a huge steps today. If you look at, I mean, the first few days of the pandemic, I remember my bank arranged a digital newspaper on my mobile or my account. It was I got, oh my god, what is happening there? But then gradually I realized I have shifted from that newspaper, the paper, newspaper, everyday's morning newspaper, to a digital paper, and it is a shift permanently happened. Similarly, if you look at, and then what is the impact of that? The revenue, 70% of the revenue which used to go to that media is now shifted towards the digital media. Similarly, I am quite sure in your case also, the experience, the way I know some of this insurance companies, CIO and the CEOs, and they were talking about last week only that how they have seen the the policy booking or the mutual fund investment, uh, the channel has completely shifted to the digital front. From the percentage is no less than 70 to 80%. Even in some cases, it is even higher. So it clearly indicates the need of the hour is digital transformation, and the future.
Prashindu, excellent point. Just hold it for a minute. I want to talk about technology, but
Sure.
to round off on the liquidity, I think we also have had a very similar experience that we have not seen a shortage of liquidity. And I think all the NBFCs that the people who spoke on the panel, everyone mentioned that liquidity was available, and that's a fact. That if your business was doing fine, liquidity was there. But I must mention that nothing happens on its own. In a difficult time of disruption, the fact that there was no liquidity crunch, because you don't hear of news around NBFCs failing because of liquidity or someone not being able to grow because of liquidity. And one would have expected that during a disruption like that, the banks would freeze down, etc. And I think it has happened because of some very good government policies, and we've got to give them credit for it. I think many of you did mention that during the initial phase of COVID, when everyone was getting worried that what is COVID about, I think Amit also mentioned that first phase, the government policy was to release liquidity. TLTRO was brought in. CGT MSC program was brought in to tell banks that please lend. So banks were allowed a lot of liquidity, but banks can sit on liquidity and not lend if they are averse to the situation. So government did both from policy perspective, that they created liquidity in the hands of bank, plus they encouraged the banks to lend by helping them with a credit guarantee, by giving them TLTRO funds, etc. So I think we should acknowledge that. But the good part is that I haven't heard of liquidity becoming a big issue. And even going forward, there are, you can see that the RBI stance was to keep the liquidity tap on. And yes, I think as NBFCs, we can always say that there could have been more. And we'll always keep saying that, there could have been more, but we all acknowledge that it was one problem that was handled quite well. Now, looking at and I can see many of you smiling, so I know that that's a common thought. But moving on, I want your views on how exactly has the government helped. Are there any of the government policies that have specifically helped you? And be specific to your own experience, because I have heard a lot of generic stories that many of the government schemes have done this, done that. For yourself and your customer base, which are the policies of the government that have truly benefited you? I'll start with Ashok first.
Okay. So I actually want to mention a little bit of technology and then come to this point.
Sure.
I was just wondering that on a normal day, if there was a webinar or seminar, we would have been in a conference hall and I would have not been able to reach because of the traffic. But today I'm able to talk to all of you sitting in the car. So that is the power of technology. So we use the same way when you are traveling, sitting in car, going somewhere. We actually do the video call with the customer, let's say, right? And you can do video KYC, video PD. So that way it has become far more comfortable and you can say better utilization of time because of the technology. That happens with the team also. Now coming to the point of whether the government support, whether TLTRO or any other scheme, whether they help us, frankly speaking, no, because of our size. So we were not really eligible for most of the things. However, we actually got the benefit because of our lenders got the benefit. So actually they passed on the same benefit to us, whether it was in terms of moratorium. So while there was a lot of confusion whether banks or NBFC should give, say, moratorium to the borrower NBFC, not the end customer. So when we gave the moratorium to our customers, our lender actually passed on that benefit to us. So in a way, that moratorium benefit which was given to the customers was available to us from our lenders to us as NBFC company. Similarly, if we had done, say, restructuring of the loan and if we needed that kind of a support or help from our lenders, we actually got that support from our lenders. So it was not really directly, but indirectly, we actually got the benefit of all the government schemes and which we actually passed on to the customers. So is the ex gratia, which was the compounding of interest differential, which we are supposed to pass on to the customers. So we actually gave the benefit to the customers, and that amount we got reimbursement from a government. So in a way, we could really pass on the benefits given by the government to the customers.
Thank you, Amit. Thank you, Ashok. Amit, your perspective?
Yeah, so if you talk of satin housing specifically, I think Mr. Ashok has already mentioned that the government provided the moratorium, which was good for the customers. But my view is that moratorium actually leads to a lot of compounding and other things, and then it's basically difficult for customers to pay when the moratorium ends. But anyways, Corona being one of its kind of an event risk, the only breather for the customers would have been to give the moratoriums. So in satin housing, we provided a negligible moratorium because the customers didn't ask. I think the quality for us has been the essence, and we keep a lot of buffers in the case of emergency while assessing the loans also. We never restructured any loans. So honestly speaking, satin housing has not been into this kind of a situation whereby I can comment on how it has, benefited us. The only benefit that I can share is that the LTRO schemes that were launched. So though we got the what we call as a drop in the ocean, but still at that point of time the drop was valuable. So we got that, and we were able to do that. And we are a very fair company. So as Mr. Ashok Mittal said that the compounding was waived off by the government. So we never did the compounding in the case of customers. So we never even filed those returns. So I think from our side, it was pretty okay, and we didn't face any challenges. But whatever government's benefits were there, we passed on to the customers. And being a very conservative company and taking care of 6 to 8 months of a cash flow, we never asked from our lenders for moratorium also. So I think if you ask satin housing practical experiences, except for this LTRO, I would say that I don't think so there was a lot of impact on our life or the life of our customers. So that is how I would like to share.
Sure. Thank you, Amit. And Manish?
Yeah, in a way, very similar to what Amit and Ashok said. Like Amit, the customers did benefit from the restructuring. And I think it was good of the regulator to look at, whereas the first restructuring was more like a compulsory restructuring, but the second one was more left to the NBFC to provide that. I think that was a more sensible way of doing it because it led to, ultimately the borrower still has to pay the additional interest during that period. So I think, but the first restructuring probably because of the way the economy got locked down, there were borrowers who genuinely benefited from that. So those were the two things that for the first restructuring is what we used. We did not seek any restructuring from our lenders, and we were a small NBFC and at that point of time, so did not directly get benefited through any of the government schemes from a liquidity perspective. But because of that, the trickle down effect, as I said, is always there. So we did because of the customers that we approach and the PSL requirements, we did see some of our lines even coming through during those days. So those were, I would say, the benefits that we got as our team.
Sure. Thank you, Manish. I'm very happy that there are some very honest answers, I think, from all the three NBFCs. And even our experience is not very different, that a lot of these schemes had only marginal use for our customers. To give you an example, the credit guarantee scheme, we hardly use the credit guarantee scheme because the quality of our portfolio was fine, and we thought that that rather than get into a CGT MSc sort of program, although we did get into that to some extent, but most of it was outside. But having said that, I think if I say that the policy intervention for many of the mid-size and the small NBFCs was probably not as direct as it was for the banks and for the large NBFCs. But at the same time, there's another policy intervention which I think I would thank the government, and that is that during the third wave, they did not lock down. Not locking down was the biggest help that the government could give to our businesses, I believe. Because if our customer was operating and continued to run his business, things would be fine. And I think I'm happy that that there was some learning from the wave 2 problem, And in wave three, despite the fact that it showed that it was highly virulent, etc., the government did not panic and get into a knee jerk. Otherwise, we would have been sitting today and also talking of how to recover from the wave three. So I think overall, I would say that I would summarize the government intervention as seeing that it may not have trickled down directly, but it did trickle down indirectly to NBFCs, and it created a positive environment in the industry, so that we didn't see lockdown of liquidity or reduction of liquidity. Getting into technology, which I had promised, let's start with you, Palashendru. What are the ways that NBFCs are already leveraging technology, and how do you see that develop in the years to come?
Okay, thank you very much. This is a very interesting question, and I can tell you what are the things they are doing presently. Some of the established NBFCs, they have their core part is already done. So this time, it helped them to reach out. Means how can they reach more to the partner? How can they reach more to their customers and different other ecosystem? Many of the NBFCs are also joining hands with the banks and selling their products in a multiple ways. So how can they onboard the partners? How can they onboard the customers? How can they make use of technology to resolve any dispute or any claims, etc., uh, or even for this loan settlement, etc. So those things we have seen in one area definitely has made a huge impact. And some of the houses are already very very advanced stage, and they are most likely they will continue even after the pandemic in the same way. The second area I have seen the experience has completely changed, and it is a sea change. The behavior of the customer is changed, and I believe it has changed permanently. So those things are being addressed by them. So when we are talking about the customer centricity or customer experience, uh, this customer experience is a tip of the iceberg, right? If I really need to create a state of the art customer experience uh, uh, you know uh, framework, I need to have the underlying very very strong, which is not visible to everybody. So how my systems are integrated well, how when my, let's say, a dealer is logging a particular case, how it is getting validated. One speaker was talking about the UID. uh, so how am I collecting, fetching those data? So this application program interface, APIs, it is the API economy we all talk about, right? How are we fetching those data? How are we automating those flow into the backend? So backend system has to be very very robust, and that is what they have built in. So some of them, they might have got a very strong robust setup. Some of them have built it. And the good part is, this thing has actually has been working very parallelly. So people who have already got a very good infra, very good base, they have created that connectivity, they have made that automation done so that they can take the decision faster. And people who have started their journey maybe just before the pandemic or little before that, uh, they have taken this time to build many such initiatives. And when we are talking to the customers, we are getting this feeler that this journey has helped us to combat. This journey has helped us to float around, and I believe this will help us to grow. So that is the feeler I am getting, and that is why we are seeing a huge adoption of uh, technology. And here, the open source based technology is taking a lead role, because it is not only helping you to reduce your total cost of ownership, it is giving you a lot of choice. Today we are talking about the way we are talking in this platform. So if I look at, in most of the cases, behind those technology, this open source is playing a huge role to make that happen. So open source, the technology as a whole, is a true partner to the business, I believe, and this partnership is evolving even stronger during this pandemic.
Thanks, Palishendru. I like the idea that the technology is partnering the companies and NBFC specifically and creating choices for our customers and good choices. Uh, uh, Amit, let me invite you. What are your thoughts on use of technology and how it is evolving?
A people's person. So, as Mr. Mittal said, that though we are able to connect, but I would love to meet the people in flesh and blood and have a coffee with them. But anyways, for technology, I use the terminology "saathi haath badhana," because I think technology has to be divided, if you see, from the housing finance sector or from the NBFC sector, into two parts. So one is the sector whereby the all formal loans are there. So you have a salary slip and other things which can be there and easily accessible. The bigger part of the business which we are doing, and maybe a lot of NBFCs are doing, which is the informal segment. Now, in the informal segment, I divide the technology again into two parts. One is the front end and second is the back end. So I see the role of the technology more in the back end because we are still into brick and mortar business, whereby for the credit assessment, I think we need to meet the people. Because technology can give me an artificial intelligence, some database to arrive at my decisions, but it can never take out the flesh and blood kind of a meeting, because if we lend loans to some, tea stall guys or some, some food guys there on the street, technology can give me a database to arrive at the decision, but it can never take out the human connect in the informal market. So that's how I take it up. At the same time, it's a very, very important tool. So we are also a very technological driven company, but I would say that it's more of a business facilitator. So it's just like that somebody is making the ice cream, but Zomato is basically the facilitator to deliver at your doorstep. But that human element of making the ice cream cannot be taken out. So for me, technology is important, but it would be more of a lead generator. It will be more of a excellent backend processing. And with this kind of a technology, we can actually take care of pilferages, which may happen in backends and maybe leading to the faster processing. But I would say that the human connect and technology blend has to go together to bring the business at the best levels. That's how I see technology.
Thanks, Amit. Let me go over to Manish. I'm sure that with a fintech approach, he might have a slightly different view. Go ahead, Manish.
Yeah, so I have a bit of a different view. Uh, we are a digital first kind of a company. So yes, technology is extremely core to what we do. I mean, platform is what is core to our delivery of business. But I personally see that the entire technology, I would say, revolution that has happened in India has been led by a lot of public good kind of technologies that have been developed by, as I said, the partnership between government, the regulator, as well as private sector. I mean, and organizations like NPCI. I mean, the UPI, of course, we talk about as the prime example, but the entire, various other public goods that have been created, be it account aggregator, the TRED system, Open, OPEN, a lot of those are the ones which has been developed and which a lot of NBFCs have integrated into along with partnership with banks. So that is really the core, and it's very exciting times ahead in terms of how these can be further really scaled up upon. But I think the biggest challenge in terms of technology, and especially for the kind of customers, probably you, I, certain, I mean, a lot of us cater to, is how this technology is delivered for the benefit of our customers. Because what has happened and what will continue to happen is most of this technology will be another tool in people in hands like us, so who already had a bank app, and now you have a Beam, and you have a various payment apps which are additional to what we have, and it gets limited to the low hanging fruits because the transaction capability is very yet, if we, for the kind of customers that we go to, neither they have typically the financial literacy nor the digital literacy, and also the challenges in terms of digital infrastructure with a smartphone per home rather than an individual smartphone to really use this technology. So, if you ask me, the next wave of innovation, and which is what we are fairly focused on, is how do we deliver this technology for the benefit of our users, and that is a bigger focus. How do we make some of these, how do we increase the trust in terms of these technology? And even with people having a smartphone, I mean, the numbers that we have in terms of they actually transacting on payment networks is, I mean, sometimes even in single digit numbers. And that's more
Sure.
in terms of the trust in technology, more the softer aspects in terms of the technology. So I would say, while we have one of the best ecosystem which is available from technology tools, we have the one of the best brains which are available. The delivery mechanism is something to focus on. Plus, also what we need to probably work more on, that is what we are working on, is how do we create a standardization in terms of technology implementation and execution. Because we all know when we have to integrate with various banks or various of those tools, there is a very varied experience. The ecosystem of APIs standardization is not there. And there is, I mean, as we do in manufacturing, I mean, India was known for it. We are actually doing it in a technology system of jugaads we do to get it done quickly. And I think that is something that needs to be there, where there has to be a standardization in a way where technology implementation also happens. So those are the areas I think which a lot of innovation will happen in the next few years. That's my approach to technology.
Thanks, Manish. Ashok, your thoughts on use of technology and way forward?
Yeah, Sanjay, I think very important point. So first of all, there is absolutely no denying that technology going to play is already playing and going to play in future a very large role as far as the lending ecosystem is concerned. But I have few points here. While I totally agree and endorse whatever Amit has said actually, because it depends on what kind of client you are servicing. So we at Press Loans, we service the MSME segment. Within that MSME also the micro segment. These people do not have very strong digital footprint, so they are not really using technology a lot at their end. In fact, maybe 30, 40, 50% customers may not have a smartphone. So we really need to understand the client base and then decide what kind of technology we should use for them. So our use of technology is more about improving our efficiency on the back end than using it on the front end, right? So we take a lot of data from the customer and use the database for understanding the profile, creating that our own, let's say, risk score mechanism, like similar to credit bureau system. So in my view, technology can be used or should be used at three levels: at the origination level, at the underwriting level, and at the collection level. Incidentally, I feel that so-called fintechs, they have been using technology at a origination level a lot. You would have experienced personally if you use any fintech platform. You is bombarded with the mails, SMSs, WhatsApp message, etc. for the loan you can avail. But when you actually go to them and start applying for the loan, it actually gets converted to a physical mode. So somebody ultimately has to come to you, right, for understanding your profile, etc. So for those fintechs, in a way, it is more for origination, getting the client data, using that data, cross sell, upsell, etc., and do marketing. Second part is underwriting. So, like I can explain about my company, I'm sure others also would be using similar model. So, what we do is we take customer personal detail, which can be directly fetched from any API system, or we take that information when the our credit person visits the customer. So there are, let's say, personal information, social information, financials, bank statements, etc. So some of them are, say, financial data, some of them are non-financial data, right? Based on that, we create our own score. We call it press score, and we, let's say, profile the customer. We actually give the similar kind of scoring the way CIBIL does it. So out of 1,000, we create certain score and then see how much risk on the customer we have. So it is still used by us as well as I think by many other people as far as underwriting is concerned. I personally feel technology is far less used for the collection purpose. Actually, that is the most important aspect. So while it is used by, let's say, telecalling, but still the customer behavior understanding by using technology, any kind of algorithms or machine learning is far lower. So I see there is a huge amount of scope to, let's say, use technology for the purpose of collection. And in fact, before the default, if we can really understand the customer behavior in terms of payments. So have come across some companies who say that they use technology, but frankly speaking, when you go deeper and try to use them, the use of real technology is quite less in that area. So
Sure.
there is a good amount of scope to use technology for collection.
Yeah. Thanks, Ashok. I think the sense that I draw is that it depends on the type of customer you have. If you have a micro enterprise customer or a bottom of the pyramid customer, very unlikely that you will use it for origination, but you can use extensive technology in back end areas. I think Amit also mentioned it, Ashok also mentioned it. Areas like the underwriting, even collection. And many of the companies have started moving in that direction and have actually made some very good progress. And I believe that iFinance, where that I manage, also has made some good strides there. But there will always be more to be done. And I think Manish mentioned an interesting thing, that we have such a good infrastructure that is available to us, which is not there in many countries. And I think that without realizing it, we use that infrastructure extensively, the eKYC, the NACH, etc. Many of these things we use it, and now we don't even think that there's something unique about that technology. So we use a lot of technology as of now, and that usage will, I'm sure, increase. We have a few minutes. I want just a quick 2 points from each one of you. Now that the COVID wave 3 has not been as severe, what is your two takeaways from the pandemic era that you will deploy as you normalize your business? Amit, why don't you go first?
So the biggest learnings would have been that the threats and the challenges has made us more stronger. So I think all of us have survived together. So that brings a lot of confidence. And the second thing which I learned was, I think the emphasis on not running for the numbers and ensuring the quality really helped us survive in a very, very, I would say that easy manner in terms of such a tougher situation. Because I don't think Corona is basically a structural risk, as I told. It's an event risk. And a lot of events come and go. But if you are basically strong enough on your business and able to take care of your profits and cash availability, you'll be able to survive. So these were the biggest two things which I already followed, and it reasserted in this pandemic time that yes, these are the things which really needs to be looked at. And I think third wave is pretty okay because as you rightly said, the movement is not restricted. So let's all be happy, healthy, and drive the valuations is all I can say.
Thank you, Amit. Manish, quickly, two things.
Yeah, so basically, I would focus on again the biggest learning from wave one, wave two is really further deepening in terms of the delivery system of the technology, where how we can engage with our users in terms of technology, how it can benefit them. So that is one. And second, I mean, people know, I mean, a lot of people say, I focus a lot in terms of Plan B, where disaster recovery in terms of how do we always be ready for event risk, how do we resilient to event risk, and focus our business more from that perspective as anything can happen. I think we have seen in the last 5 years, especially, a lot of event risks have been happening almost every year. I mean, I'm leaving aside the natural calamities. I mean, even otherwise, and I think we'll, as a business, has to take it as a part of our business plan.
So let's not celebrate too early. Ashok, go ahead.
So I will give my views based on the topic which has been given for this panel, which is largely on the customer side, valuation side, or how to survive. So two things are in my view. One is there is going to be a lot of convergence between technology and lending. So you have seen a lot of payment companies or technology companies getting into lending. So similarly, lending companies or NBFC companies will adopt a lot of technology. So there is a convergence going to happen. So the difference between fintech or tech-enabled NBFC will narrow down a lot. That is one. Second is regarding valuation. So I hope and I expect that the valuation of NBFC companies also will get driven like technology or fintech companies, which means we say huge amount of spurt happening on NBFCs, because currently NBFCs are being valued a book value multiplier or some multiplier, but technology companies are valued based on what the projections are, based on technology and how much touch point you can have. So I expect that to happen soon.
Thank you, Ashok. Wonderful speaking to all of you. We are just on time. And thank you for your views. And thank you again for the viewers for the patience of hearing us out. Thank you.
Thank you very much. Thanks,
Thank you.
Elets, and thank you, Sanjay, and everyone. Nice talking.
It was one great, insightful session. Now, as a token of appreciation, I would like to present the appreciation certificates. Thank you, Ashok Mittal, Chief Executive Officer, Press Loan, for joining us today.
Thank you so much. Thanks a lot.
Thank you, Sanjay Sharma, Co-founder and Managing Director, iFinance, for joining us today.
Thank you.
Thank you, Mr. Amit Sharma, Managing Director and Chief Executive Officer, Satin Housing Finance, for joining us.
Thank you.
Thank you, Mr. Manish Thakur, Chief Operating Officer, Avanti Finance, for joining us today and sharing such valuable views.
Thank you.
Thank you, Mr. Palashendu Bhattacharya, Sales Head Corporate Business, Red Hat India and SA. Thank you for joining us and sharing such valuable, insightful views. Thank you, everyone.
Thank you.
Thank you very much. Thanks, Elets and team.